DStreet extends losses amid global jitters and earnings-led moves. The Nifty languishes near the 24,200 mark while broader indices also lose momentum. Major sectors are contributing to the losses as Pharma actually bucks the trend. Tech stocks remain under pressure despite decent Q4 prints. Tech Mahindra slipped even after beating the profit and revenue estimates that the street had. Street maintains a cautious view on growth visibility though. L&T Tech also edged lower despite steady growth and margin improvement. Management highlighted early signs of recovery in mobility. IT will continue to remain in the spotlight. Infy expected to report a mixed Q4, dollar revenue declining sequentially due to seasonal weakness. Rupee revenue and profit will likely see some support due to currency tailwinds. Margin likely to remain flat. Reliance expected to report a mixed Q4 with revenue growth led by retail and telecom, but margins likely under pressure due to weakness in the O2C and oil and gas segments. Meanwhile, Jio is likely to see steady growth supported by ARPU expansion and subscriber additions. Dr. Reddy is on fire on hopes of a breakthrough in semaglutide generics. Analysts expect potential approvals in Canada soon, where the company holds first to file status with a possible launch in early FY27. High-stakes battles are unfolding across key states. In Tamil Nadu, the contest is intensifying with shifting alliances. Actor-turned-politician Vijay makes his electoral debut alongside prominent voters like Kamal Hassan and Rajnikant. Meanwhile, in West Bengal, voting is underway across 150 constituencies with TMC seeking a fourth term and the BJP positioning itself as the primary challenger. Hello and welcome. What we're seeing on markets today is a tough day, a tepid kind of day, a second straight day where we're closing or set to close in the red, 0.5% plus lower on the Nifty 50 index is what we're seeing. And even within the Nifty basket, the breadth doesn't look too favorable. In terms of the advance decline within the Nifty, it is just about 18 advances to 32 declines that we are seeing. The Nifty mid-cap and small-cap indices also trading in the red today, very unlike yesterday, but they continue to outperform the Nifty 50 index by around 0.5% thereabouts. Therefore, kind of gives you where the pain point is. It's Nifty Bank and Nifty IT, of course, and Nifty Bank is down 1.4%. Nifty IT also sitting in the red. Union Bank is the top loser on the Nifty Banking Index, 7.5% lower. The slippages number and as well as the provisions number looking elevated, and therefore you're seeing that slip up on the stock price. Outside of that, Canara Bank, Bank of Baroda, HDFC Bank, PNB, Kotak Mahindra Bank, all of them trading with losses of over 1.5% at least today. And you're seeing that slip up from some of the PSUs as a result of Union Bank's numbers. A Can Bank, as you can see, a Bank of Baroda, if we can pull that chart up as well. The Nifty PSU Bank as a whole, in fact, has slipped 2.25%. And a predominant part of that slip has been post the numbers of Union Bank. And we've seen that slip likely sustaining at least for the moment. In terms of other sectors, let's pull up the sectoral heat map. That will give us some texture. Pharma is up 3% on the back of Dr. Reddy's flying away in trade. Defense is up 0.7%. Energy is up 0.5% thereabouts. FMCG absolutely flat, but trading in the green. And when you're looking at some of the other names, IT we spoke about, but Nifty Realty is down 1.2%, and the Nifty Auto is the top sectoral loser, down 2.3% in trade. In fact, if we can have the constituents of the Nifty Auto, that'll give us a sense as to what's playing out there as well. But likely, one of the casualties at least would likely be an M&M, which would be trading lower in today's day of trade. I want to quickly pull up that M&M chart, try and see what that one is doing. Well, 3% lower, and it's one of the top losers on the Nifty 50 index as well. So that's creating the drag. DRL is up 10%, 11% higher in fact. Cipla is up nearly 6%. So Pharma has made some very solid moves in trade today. Let me bring in Kunal as well to give us his view with regard to markets today. Kunal, what are you seeing?
Well, it's not that bad a day, Harsh, I'll say, frankly, because even though with the Bank Nifty down some 800 points and the Nifty down 140-50 points, you're still seeing the market breadth to be more or less flattish, I would say, not very, very skewed towards the negatives. In fact, today is one of those very rare days where you're seeing pharma stocks evolving quite well. With that, you're seeing defense stocks perking up quite well. And there are those individual counters which have done reasonably well for themselves, whether it's the likes of Hitachi, Polycibzar, etc. So that tells you that it's not that bad a day for the markets, and the stocks are losing their momentum. So that, I believe, could be a positive. Yes, I think over the next couple of days, there could be a play which could be there that the markets are, or the our markets are going into the rollovers. So maybe that could keep the markets a little bit on the a fringe. Crude oil prices, I think, trading above $100 on the Brent crude. That would also keep the markets on the edge. But I think broadly, when I look at the markets today, it indicates that our markets have a capacity to try and absorb at least a near-term kind of a correction, unless things go out of hand across the globe.
Okay. Is it a good time to initiate fresh longs now on the Nifty? Would you believe that the risk reward has actually gotten or improved substantially versus yesterday, Kunal?
Not substantially, but yeah, I think maybe at another 100 points on the downside, 24,100 mark could be a slight better zone, because then you are looking at a risk reward of maybe potentially 100 points or 150 points as a stop loss, and then 350 to 400 points on the upside. So that will probably try and skew the risk reward slightly better. So just waiting for that to happen. And I think the reason why I'm not initiating a buy on the indices is because Bank Nifty is still the most struggling one. Nifty IT is the most struggling one in terms of the indices. Both of them, they constitute more than 40-50% of the overall index weightage. So that is also one of the reasons why I would believe that maybe even if the indices go into a drift over here, we head toward 24,100 mark. That's a much better price point to try and initiate a buy.
Okay. In fact, let me bring in Karan before I quiz Kunal further on some of these moves. Karan here with some of the stocks that are in news.
GE Vernova India is in focus on the back of the global holding company releasing its first quarter financial results and raising the guidance across three metrics. The revision in guidance entails a $500 million increase in revenue, 100 basis points expansion in EBITDA margins, and $1.5 billion increase in the free cash flows. On that note, the management has commented that the equipment orders growth was particularly strong in North America and Asia, both roughly tripling on a year-on-year basis. So do watch out for GE Vernova. Followed by Patel Engineering, wherein the company has been declared as the lowest bidder for a 1,500 crore rupee contract. On that note, the company's order book stands north of 15,000 crores with a book-to-bill of 2.8 times. Fujiyama Power Systems is also in focus on the back of the brokerage house Motilal Oswal initiating buy coverage with a target price of 340. Moreover, the brokerage is expecting the company to deliver a strong growth of 56% in revenue over the next 3 financial years. Websol Energy is also in focus on the back of the volumes being significantly high above the 20-day average, and the stock is up 20% in the past 1 week itself. Oracle Financial Services is also in focus on the back of its Q4 earnings, wherein the profit was up 38%. On that note, the CFO has commented that the growth was supported by a strong deal pipeline and improving efficiencies driven by AI-powered tools. Camlin Fine Sciences is also in focus on the back of the volumes being 18 times the 20-day average. And this company has been reporting losses from the past 2 financial years. And finally, we have Unimec Aerospace, wherein the company is set to acquire Hobel Bellows, which is a specialized Indian manufacturer of metallic bellows. And this is a significant step in Unimec's journey to build a globally competitive, capability-led precision engineering platform.
Okay, thank you so much for that, Karan. Kunal, 11% move on DRL. What do you make of it?
This is out of the blue for the stock price, because this takes the stock back towards, I think if I'm not wrong, just about a 1-year high to March or April 2025 highs for Dr. Reddy. But what this does is it gives a jolt of positive optimism across the pharma stocks. And in fact, right at the start, when you saw Dr. Reddy opening with a gap of 3 or 4 percentage points approximately, you saw a slew of the pharma names, Cipla, Lupin, DV Slab, Aurobindo Pharma, even the underperforming names like Sun Pharma, it got some sort of a reprieve for itself. So that tells you that this may not be a very ordinary move for Dr. Reddy, that the stock is moving up higher by 10-11%. This could probably indicate that the stock could become the new leader for the entire sector for the pharma stocks, which was much needed because, we were at a point where the pharma index were going through a major grind. So it's good to see that there is at least finally one stock which is emerging as a strong breakout candidate, and that could probably surprise or maybe give a positive reprieve to the rest of the other stocks from the pharma pack.
Okay. And what do you make of Union Bank's move today? 7.5% low, and the PSU banking pack altogether, Kunal. Should one buy this dip?
So I think now this probably, so Union Bank is not closer to a support as of now. So that's why I would not suggest a buy. The nearest support for the stock is around the 166, 170 range. So which means potentially, I think we'll wait for another, maybe a couple of days for the stock to drift lower to that 170 kind of a mark, and then try and reassess whether the selling pressure is abating or not. But yeah, I think today the bigger concern for the markets is the underperformance on the Bank Nifty, and within Bank Nifty, it's the PSU banking names for a change, which are the ones which are ebbing off. The candlestick pattern for Union Bank indicates that I think right from the start, it's a classic Marubozu, and bearish Marubozus generally are patterns where short-term traders should start to become a lot more cautious. So that's why I would probably not initiate a buy on the PSU banking names and even for Union Bank.
Okay, stay away. Marubozu, I'll spend some free time either Googling it or trying to understand that better from you, Kunal. But let me bring on board Merrill, who's here with a lowdown with regard to what's happening on Dr. Reddy's labs. It's seeing traction in trade, fresh buzz around semaglutide, street chatter with regard to the Canadian approval on semaglutide. Merrill here with all of that.
Yes, Dr. Reddy's is buzzing in trade today, and here's a potential reason why the stock is seeing such strong traction in today's trade. Well, we spoke to a few analysts, including Mr. Ankush Mahajan from Sanctum Wealth, and the opinions circle around a potential Canada approval for Dr. Reddy's generic semaglutide. In fact, they believe the official announcement could come out as soon as a week later, with the company in the late stages, or at least very, very close to actually receiving the approvals. He also said hedge funds are currently building up position in the company's US-listed ADRs, with the volumes definitely there to justify that picture. In fact, the ADR is seeing volumes up almost 52% over the 90-day average volumes. Remember, in October 2025, Dr. Reddy's had disclosed that Health Canada rejected its initial applications, and analysts back then had estimated that this could delay the launches by around 8 to 12 months. So a Canada approval coming this early could definitely justify the strong moves we're seeing today in the market. Dr. Reddy's also has a first-to-file status in Canada, which could still see benefiting the company, and the street has penciled in around a $100 million revenue potential from Canada approvals in just this financial year itself. Now, this is definitely a huge opportunity for Dr. Reddy's, making this quite an interesting and important space to watch.
Well, yes, and the ADR is also signaling that this sharp move will likely be sustainable. So that's the other piece you want to keep on your radar. Dr. Reddy is obviously flying away in trade. Kunal, what are your top picks in a market like this? We've spoken about PSU banks, stay away because of Marubozu. With regard to Dr. Reddy's, it's a totally different kind of move. But give us your first top picks. Thereafter, I'll take your pick on Pharma.
Yeah, so Dr. Reddy is a bullish Marubozu.
Okay, awesome.
If Union Bank is a bearish one, so Dr. Reddy is a bullish one. So that could probably set the tone for the stock as well as for the sector going forward. But two buy calls is what I would suggest. I did just take my chances over here. Hindalco is the first one because I sense that the stock is coming out of a decent consolidation over here. And the last 3-4 days, the stock has been a little choppy. The entire metal sector has been a little all over the place. But it looks like that the indicators are coming back into a positive trigger for Hindalco. So preempting that, suggesting a buy with a target of 1080, stop loss at 1024. The second would be from the defense pack, and Bharat Dynamics is something which starts to look attractive. The stock confirming a swing breakout above the 1400 mark. So would look at 1470 as a near-term target. Stop loss to be kept at 1392.
Okay, so those are Kunal's top picks. What you want to do is hold on to those thoughts. What we'll do is we'll slip into a very short break, come back, continue coverage here on ET Now. Stay with us. Welcome back, and it's a time where you just sit back a little bit and reflect as to what's playing out in global markets as well. We're down around 0.7% on the Nifty. The Qs in the morning, early this morning, were negative, so they were pointing at a negative start in any case. We've done relatively okay in comparison to that. It's a very range-bound market. We haven't slipped in significant fashion, and that's exactly how some of the other markets have also done globally. In fact, Europe has opened up as well, all of them trading with mild cuts, if I can call it that. The Stock 600 down a quarter, DAX down around 1/3%, FTSE down 2/3%. The CAC, in fact, is up 1/3%, thereabouts. So that's the one index which is actually standing in the green at this point. Let me bring on board Jonathan Chazelle, Westminster Asset Management, joining us as to what to do in the kind of equity markets we're seeing and the uncertainty we're seeing. Jonathan, firstly, very good morning to you. Thank you so much for joining in, at least from where you're at. Give us a sense. What is it that you're doing at this point?
Hi, good morning or good afternoon. Yeah, I think it's extremely difficult, quite frankly, to quite work out what is going on with markets. Clearly, we had a very decent bounce in most global markets. You know, US tech is now already back up at new all-time highs. So what bear market? But yeah, I think basically, clearly the ongoing situation in the Middle East provides a very large level of uncertainty, and markets dislike uncertainty. So we get this choppiness depending on what comes out every day on the news flow.
Where do you see oil go, Jonathan? Because largely, at least, Asia and emerging markets are getting impacted because of the oil price spike. Where do you see it go now?
It's difficult to see it in the short term doing anything but remaining much higher than I think most analysts had previously forecast. Yes, on a medium to longer term, most analysts do predict a sort of a resolution and the oil price to rapidly come back off again as we see plentiful supply reach the market. But I think certainly we've been quite bullish on the energy space for the last 6 months or so. We felt energy was very cheap relative to other commodities. That's worked out quite well, but we do still think energy, and particularly oil, does look quite attractive. Yes, there's a lot going on and the price is swinging all over the place, but oil generally was looking, if you inflation adjust it, oil prices were looking fairly cheap. Yes, we do know about the plentiful supply out there, but we do think demand still looks pretty strong going forward. So oil prices, bar very short-term movements, I think oil prices will remain higher than most are expecting and for longer.
Jonathan, is it? I'm not sure if you're the right voice for this, but give us a sense. Do you believe that it takes at least 2 months for supply chains to actually receive the oil which comes out or from its sourcing stations from inside the Hormuz? Does it take 2 months, and therefore is there merit in saying that the current oil prices is just a function of the sentiment which is playing out, and that actual supply will get hit maybe much later?
Yeah, I think that's about right. I think that seems to be, they're all saying that the tankers that got out just before the conflict started are now at their ports pretty much everywhere and are emptying out. And, you just have to look at over here in Europe where there's, a lot of airlines are cancelling flights due to a shortage of aviation fuel. And I think that problem's only going to get worse. It's very difficult for other suppliers, the Middle East, to rapidly increase production to make up for the shortfall. The tankers are obviously in the wrong place. So it's going to take a lot of time before this whole mess sorts itself out. And I think ultimately the world has changed. And as we've been talking about for some time, countries have to just relook at where they're sourcing raw materials or other products from, and you need to build in a lot more resiliency, and that's going to take time.
Are you of the view, therefore, that you will likely see demand compression happen globally, and as a result of which growth is clearly under attack globally?
Yes, I think that, we're beginning, like we're seeing in, for example, aviation fuel, there is certainly some demand repression happening. I think if oil price heads much higher, I guess the bigger worry, yes, there will be some demand destruction going on in energy, but the feed through onto food prices, there's obviously a strong link between energy prices and food prices, and that hasn't really started to come through yet, but that will certainly come, let alone the issues around fertilizer that we've all read about as well. So I think down the tracks, there will be a food price issue, inflation issue coming, which again, if you look at longer term and short, even medium term inflation expectations, the market just isn't buying that at the moment. But we do see there are severe risks of much higher inflation ahead.
And Jonathan, give us a sense, therefore, have markets been far more resilient than what you anticipated with the evolving situation?
I think the US market in particular obviously has obviously regained its leadership role, is pushing out to new highs. To be fair, you haven't seen necessarily any margin. You've seen the rating of the US market has actually contracted, but what we've seen that's driven it higher is earnings. The earnings expectations have been revised up quite aggressively. It's difficult, if you build in a scenario of higher input costs and higher costs generally, it's difficult for us to see that actually will play out, apart from maybe the next quarter. So I think there is a level of complacency in markets. The market is looking through this issue as that's a short-term issue and it'll go away. So we are a little bit more concerned on that, but we'll see, how it plays out.
Okay. And Jonathan, therefore, should one be cautious currently if someone is looking at equity markets, especially here in India? I know you do have views and therefore trying to get your sense. Should one be more cautious at this point, given that there's no real resolution as such, which has been inked yet? Or do you believe the market will likely look through this and say that supply chains will rewire and things will get better going forward?
Yeah, look, I mean, energy markets have they're incredibly efficient about rewiring things pretty quickly, but I don't think it's going to be that quickly. So I would agree. I wouldn't necessarily say go underweight equity, but certainly anybody who's sitting on decent profits, bring it back to neutral, to a more conservative weight is probably suitable. Obviously, markets like India, did come off a little bit more than perhaps some other markets. India, Europe, the energy dependent places have obviously got hit harder, and they haven't rebounded as much either. So to a degree, there is some of this. These issues are in the price. If you look at, for example, a stock like L&T, which has rebounded very strongly, I think, I look at that rebound, the level of rebounding, and it's a little bit difficult to comprehend, quite honestly. As you mentioned, nothing really has been resolved in the Straits, and this could go on for some time.
All right, Jonathan, thank you so much. This gives us a great perspective. Thanks so much for coming in and speaking with us. All right, viewers, what we'll do is slip into another very short break. We'll continue coverage on the other side. We'll start to talk stocks, and especially with regard to Indian markets, try and understand what's moving and how to look at this going forward. Stay with us. Okay, welcome back and thanks for being with us. Meryl here with some of the stocks on our radar this afternoon. Meryl.
Here's a few stocks that we've seen buzzing in today's trade. First of all, an important mention, the Pharma pack is seeing a lot of strength, especially today. On the back of this, Dr. Reddy's is a main player. They're up over 10% in a single trading session on the back of reports suggesting that the company has received, or at the very least is very close to receiving, approvals for its semaglutide generics in the Canada market. Also in focus among the pharma pack is Cipla, after the company's received final FDA approvals for a generic version of Ventolin, which is a respiratory drug. Remember, Cipla is a very strong player in the respiratory market, especially in the USA. So this is a very big opportunity for it in a $1.5 billion market, especially in the USA. In other news, Union Bank is in focus after just reporting a sort of weak set of fourth quarter numbers. Slippages have been seen rising for the bank on a quarter-on-quarter basis, putting pressure on the stock's performance. Also in focus today is Tata Motors PV, after the company's JLR in the North America is recalling around 170,000 vehicles in the US, and the recalls of the vehicles are as loss of drive power increases the risk of crashes in these. On the back of this, the stock is seeing tremendous pressure in today's trade.
Thank you so much for that, Meryl. So those are some of the buzzers. Kunal, let me have a bit of a conversation on Pharma because it warrants so. Pharma has been this big underperformer, right? In this entire rotation that's at play, is now Pharma firmly back?
Yeah, it looks like, Harsh, because the entire index was flatlined. We look at 50 DMAs and 200 DMAs. Have given multiple examples prior. Both these averages had flattened out for the Pharma index, and that too not for the period of the last few days, but for the period of the last 2 months, where both the averages had flattened out. Now we are at a point where the Pharma index is at the cusp of a breakout. The averages could start sloping higher. That, I believe, could be positive for the Pharma index, which means that standstill which the Pharma index was, that is now over, and we are looking at a potential trend in the making for many of these names. There could be a possibility that even the underperforming stocks like Sun Pharma, Cipla, etc., even these stocks could make a strong comeback. And the stronger ones which were already there, the likes of Glenmark or Aurobindo Pharma, they are the ones which could continue to show signs of strength. So now you would probably have more stocks from the underperforming category coming back to maybe a market performer or a outperformer from the Pharma index as well as for the overall market.
Okay, so if one were to just try and get a sense as to what to do, should you adopt a basket approach here, buy an ETF or specific stocks?
Yeah, a basket approach is a much better approach over here, Harsh, because you'll have to bank on variety of stocks over here. So, you can probably start with maybe Glenmark and Aurobindo Pharma, which are the two stronger ones. Dr. Reddy could be maybe a buy on a staggered approach after today's 11% up move. You might have to wait for just another couple of days or maybe a week or for the stock to ebb off slightly bit more. But then you'll also have to look at buying the underperforming names like Cipla, to a larger extent. Maybe that could be another stock which could come back into revival. Laurus Labs has been doing phenomenally well, but that stock apparently had been a little bit more sideways. So there are plethora of options within the Pharma pack, different variety of stocks even within the Pharma pack, and I think it's always better to have a basket approach over there.
All right, and if one were to bet stocks, any specific one or two names that you would like or bet on?
I would probably keep an eye on Dr. Reddy in case if it's ebbs off another 40-50 points, say from the current levels. Then I think maybe closer to 1300 mark could be a very good zone for maybe buying Dr. Reddy back again. For someone who's looking for a breakout further. The other names could be Cipla. I think that stock is also starting to show signs of a revival for itself. Aurobindo Pharma around the 1400, 1420 range could also be a very good bet.
Okay. So some of those names is what you want to keep on your watch list, and maybe on maybe a couple of % of correction, Kunal. That's the way to look at it. So buy on dips. Dip likely anytime soon?
Yeah, it could happen. See, it's a market because if the market remains under pressure, there's bound to be a point where even these stocks could come under pressure. Just as an example, the FMCG stocks had a fantastic uptrend the last couple of days. Even though the broader trend is positive for these names, you might have one-off days today where these FMCG stocks have ebbed off from their day's high. So you'll have to wait for those kind of days.
Okay, wait for them. Wait for that dip. It will come, a % or two here or there on some of those specific names. For the basket approach, ETF can be bought today is what Kunal's view seems to be. Let me bring on board Arpit Beriwal, Motilal Oswal Financial Services joining us. Arpit, what are you doing in a market like this? It's been a difficult market, to say the very least, for the last couple of days at least. Is it a buy on dips?
Very good afternoon to all. So if you talk about the headline indices, the April series has been really quite well. Since the start of the April series, we have seen a very strong recovery across the indices, whether it's Nifty, Bank Nifty, Mid Cap and Small Cap indices. And today, if we see from last few days, Nifty and Bank Nifty has seen some profit movement from the higher levels, but the broader market is still outperforming, whether you talk about the Mid Cap and the Small Cap indices. So first talking about Nifty, so Nifty had negated the formation of higher lows after a few sessions. Looking at the overall weekly setup, definitely there are multiple supports seen at lower levels. So now our sense is that after a good rally of almost 2,000 points from lower levels, Nifty is likely to consolidate between 24,000 on the downside, whereas on the upside, 24,500, 24,600 would be a key hurdle zone. So our sense is that for next few days, index is likely to consolidate before starting with the next up move, and you have to focus on stock specific and theme specific action going forward. On the immediate basis, 24,000 would be a key support level for Nifty. On the weekly basis, till it holds above that, bias would be slightly positive with upside hurdle at 24,600 zones.
Okay. All right. So that's the level you're looking for. Arpit, what do you do if you're invested in IT at this point, and maybe at lower levels, maybe at higher? How's the trade likely to play out now, according to you?
So if we see overall, the IT index has been a huge underperformer in last couple of months, especially if we see from the start of this year, we have seen a brutal selling across the sector. And if I look at the yearly chart also, for almost last 3 to 4 years, index returns are negative. Immediately, if we see the setup wise, we would still like to go with selective counters, very selective in the IT basket, because the bigger trend is still negative. And on the talking of immediate levels wise perspective, we've seen good bounce back from 28,000 to 32,000 levels. However, post the result of HCL Tech, again, we have seen some selling pressure. So our sense is that from an immediate trading bet, we would avoid the sector, but from an investment bet, we'd stick with selective counters, such as from the large cap, that would be Infosys, and from the mid cap, Persistent. So this would be our two ideas from the IT space that would look for the investment perspective. Immediate from a trading perspective, we'd better to avoid this sector from a long bias perspective on the immediate short term note.
Okay, Arpit, we'll give that a pause. Infosys is all set to declare Q4 numbers, steady set of numbers in stock. Constant currency growth for Q4 is likely to be a degrowth of 2% odd. Seasonal weakness likely to weigh in. But dollar revenue wise, we should be okay, just given the fact that the rupee has depreciated. Let me go across to Mansi. She joins us live from Bangalore with more on this one. What to expect, Mansi, from Infosys?
Well, absolutely. I am at the Infosys headquarters and all eyes are on the quarterly numbers. And if we talk about the expectations, Infosys is expected to report a stable but softer quarter where headline numbers look decent but underlying growth might remain a little bit of a concern. Dollar revenue is likely to decline due to seasonal slowdown and cautious client spending, while rupee revenue may still show slight growth mainly because of the currency benefits which we have seen. Not strong demand. Margins are expected to stay steady despite cost pressures like bonuses and visa expenses, and at the same time indicating tight cost control but no real expansion. However, profit growth may appear strong as we clearly expect, but largely due to the base effects. Overall, the preview suggests that while the company is holding steady growth, momentum is still missing and recovery visibility might be limited. There are key monitorables which we are watching out for, and most of it, and more importantly, is the impact of Iran war on growth. At the same time, the Gen AI deflation to the growth, also AI integration to new deal wins, and margin impact due to artificial intelligence benefits from Project Maximus is what we are expecting and watching out. But all in all, it might be a decent quarter where there might be a few concerns here and there. So that's the expectation from Infosys.
Mansi, of course, it's great seeing you after a while, and with regard to Bangalore and with regard to Infosys, we'll continue to get updates from you. So thanks so much for this. Okay, and of course, we'll have Salil Parekh speaking live at 4 p.m. here on ET Now. So you want to tune in for that very special Infosys earnings press conference, which will start at 4 p.m. And we'll give you a perspective of likely how the numbers are looking like very, very quickly before that. Let me go across to Arpit. Arpit, Infosys in particular, 2% lower, now at 1,250 rupees, sub 1,250 rupees a piece. In fact, good for a trade on a day like this, plus earnings coming out, some bit of uncertainty there.
So from a positional perspective, you see Infosys is trading near its multi-month low, near its 1200 levels that we have seen in March 23. Then we have seen in swing low of April 25. However, on the image basis, still the weekly setup is weak. And if I see the sense on the daily scale also, the structure of low rise is intact. So from a trading perspective, the setup, it doesn't look that great. We'll watch out for the level of 1280 on the upside for any stability. Having said that, from an investment perspective, it is still a better bet because from a support, it's trading near its support zone. From a trading bet, it's better to avoid and wait for the result outcome. A stability above 1280 levels give which will give much more better clarity for an upside move towards 1300, 1320 levels.
Okay. All right. Thank you for that, Arpit. Kunal, do you have a view with regard to the IT back and Infosys in particular? What do you do?
No bets over here, frankly, Harsh. It's it's very difficult to try and guess, over here that which stock would probably surprise if it does. I think it's better to wait because it's as if that the entire sector is still on the bit of an edge or a downward trend from an index perspective and market perspective. You saw what happened to HCL Tech yesterday, and then I think over the last couple of days to the likes of Persistent, Coforge, etc. These are sharp and deep gashes to stock prices. And to try and lift them off back again, you need a strong jolt of positive news flow events surrounding the stock price. Otherwise, these stocks can trade in a limbo. So it's very difficult to anticipate any kind of a big turnaround. So I'll just give it a skip as of now.
Give it a skip. All right. Let me, in fact, go across to Sajid on this very critical day. Sajid, second straight day of declines. Where are the positions building up? Give us those levels.
Thanks, Harsh. We are still in a negative as we speak, and the Nifty is, hovering below the 24,200 mark. As they're down nearly 0.8%. But the open interest is just down 2.9% there. But the activity is happening in the May futures where the rollover is happening. You look at the open interest position there. It's jumped 51% in today's trade. This is for Nifty May futures there, and that's what is happening. Traders are taking a position in the next month, while they are yet to square off the positions in the current month there. Nifty Bank again, down nearly 1.5%, and the weakness just came in the last 15-20 minutes, where the open interest is down just 1.5%. But if you look at the Nifty Bank May futures, which will give you an indication of how the open interest jump there, 30% jump in open interest for Nifty Bank. Let's look at how the bank individual stocks are doing. There's a shorts which are getting built up in across the board for private sector banks and public sector banks there, except for AU Small Finance Bank where there's a long build up. We are seeing either a long unwinding happening in some of the banks, or mostly a short build up happening, and that too happening in the second month where the open rollover is happening for many of the big stocks like an HDFC Bank and ICICI Bank there. Look at open interest change. You have 24,200 which remained most active, and in the last half an hour we have seen a lot of call writing coming in at 24,200. And if you look at the distribution chart, that will give you an indication of what's happening there. 24,200 again, it's holding up for now from the put writers point of view, but the index has slipped below because of the shorts that's getting built for in the next month. Future gainers, DRL up on the back of short covering. You have seen short covering happening in Oracle Finance. Both the stocks up nearly 9%. Pharma is also up nearly 7% in today's trade. So Pharma is the sector of the day from the market's point of view. Union Bank, they're seeing a long unwind. Havells is seeing a long unwind, and Force Motor is seeing a long unwind with stocks down between 4 and 8%. Open interest gainers include Shriram Finance, NBF, NBCC, and Axis Bank, where we have seen some short build up, and all the build up happening between 11 to 12% there. While losers include RVNL, where we are seeing a short covering. Tata Elxsi is seeing a long unwind, and Ireda is seeing a long unwind, and stocks losing open interest in the current series, and many of them are getting rolled over to the next series as we speak. Most active April call, it's 9,000 April call for the Oracle Finance. The premium of nearly 100 rupees to 135. Look at the kind of activity which is happening there. 41,000 contracts getting added there. The stock up nearly 732 in today's trade. It's around 8,900 trading at the moment. Trend 4,300 April put is again the most active with the premium of nearly 35 rupees to 103 rupees and nearly 6,000. So there has been some unwind of some positions which happened in trend over the period of today, but the stock hovering around 40 to 52 levels, down nearly 185. So market is poised to stay around the 24 200 level marks, and towards the last half an hour, as the expiry happens, you're going to see some more activity with respect to financials, and that will determine where the Nifty will end today.
Thank you so much for that, Sajid. Be cautious. 24,200 is the level at this point that we're seeing based on the cues coming through from Sajid. Let me, in fact, take a quick question with regard to Oracle Financial with Arpit. Arpit, how's this one looking on charts after the kind of move that we've seen today? 9% higher, top gainer on the Nifty 500.
So as we are talking about the IT index again, and the stock belongs to that sector itself. So technically, if we see a definitely strong recovery seen on the monthly time frame, and if I look at the setup on the monthly time frame, 9,250 is a major supply zone where the stock can head towards. So on the immediate basis, definitely weekly setup is good. The stock can head towards 925093 levels. So if someone has built up a position, the 9300, 9400 would be a good level to exit and review that stock again at that level. Immediate basis, 9300, 94 would be the hurdle levels. And on the support wise, immediate support would be around 8,600. So from an immediate short term perspective, the bias is positive for an upside move towards 9300, 9400 levels.
Okay, so that's the take with regard to an Oracle Financial. Let me, Kunal, come to you with regard to our data patterns. Now that stock is perched up 7% as well. One of the big buzzers in trade today. What's the sense like on this one?
A fabulous move for data patterns. I think the stock has climbed back again to its multi-month high, if I'm not wrong, or maybe a multi-year high at the current levels of 4,000. Excellent volumes for the stock. The last 2 days specifically, we've seen the stock moving 500 points from 3,500 mark just about 2 days back towards 4,000, 4,100. The stock has made today. So I think it's been an excellent last 2 days for data patterns. Definitely a stock which I think longer term traders would probably try and get interested towards, because these kind of strong breakouts on the back of higher volumes, they generally get magnified into bigger trends on the long-term charts. I think data patterns could be one of the stock in that category.
Okay, and what about an SBI Life, Arpit? Do you have a view with regard to that one?
Insurance space, so we have seen a mixed bag where few stocks are outperforming, whereas few stocks are underperforming. So on the immediate basis, the stock is broadly trading in a broader range between 1750 to 1950 levels. And yesterday we have seen a sell off from the high levels from 2000 to almost 1820. So our sense is that the immediate structure is in pain, but the good support zone is seen around 1750, 1760 levels. So I think from a positional perspective, if the stock corrects towards 1770, 1780 levels, that would be a good entry point, with keeping stop loss of 1740 for an upside move towards 1880, 1920 levels. So right now, better to avoid. Add near 1770 levels, 1780, with a major support around 7040 levels.
Okay, so that's with regard to SBI Life. Let me bring on board Nitin Raheja, Julius Baer India, joining us as well, joining this conversation. Arpit Kunal, of course, continues to stay with us. Nitin, let me give me a sense. What should one do at this point? Should one deploy? What are you advising your clients?
Look, I think it really, if you look at the last 2 months, right? We had this big fall in the month of March, and then we've had this rebound in April. I think fundamentally, if you ask me, the near term is going to be volatile. There is no two ways about it. It's being driven by geopolitical events. It's being driven by how oil behaves. But I think at the same time, valuations have come down to levels which are looking very, very attractive for a long-term perspective. I think that the key risk happens is that what is going to be the upside, right? I think that's the important part to look at. Now, as we were going into this event, which was the war that took place, we were on an earnings recovery path. The expected earnings growth was expected to be 15, 16%. And clearly, the way the markets were correcting, it was looking very attractive. Now, 2 months down the road, we have a scenario where there is a possibility that we will see the impact of high oil prices on margins, on profitability, and earnings could get cut as we go into the year. From 15, 16%, maybe they could come down by a couple of percentage points or more. Now, in that scenario, if you ask me, point is, yes, even today from where we stand, there is an upside. If one was waiting till the end of the year, the upside might not be as much as it looked prior to the month that has gone by, and so on and so forth. But I do believe that the safety or comfort of valuations is with us. The upside might be deferred because our earnings might just get pushed into the following year. So answering your question specifically, I think, yes, it is the time that one should start, putting money to work, and one can sort of stagger that.
I'm just looking at the fall in Havells right now, and that stock definitely has taken quite a bit of knock. After that earnings reaction that you saw, the stock actually went up, and then towards the dying minutes of trade cooled off as well. And then, of course, today from the word go, it's really been a one-way move down for Havells. The EBITDA margin, of course, contracted quite sharply. Remember, it fell about 4.4%, with margins compressing from the earlier 11.6% to now 10.9%. So the EBITDA missing the estimates is a big concern, definitely. The profit beat was partly driven by the other income component, not quite the operating performance. Lloyd, of course, dragged badly for them. And the ECD segment as well, given that summer season was a little bit delayed, has been quite the problem. More importantly, there's been no growth guidance that has been given, and that is alarming the street a little bit. The management declined to give any revenue guidance, citing evolving macro conditions, which also spooked the market further. Having said that, Nitin, just wanted your commentary in on this, if you can. The fact that we've had a historical evidence of Havells, it's not the first time that they've had to deal with macro environment headwinds. Do you think declines like these can be good buying opportunities?
Look, I can't really comment on a company specific, but all I can say is the markets today are in a mood where any companies which have high valuations and who are running on the legacy of their performance are getting sold down into if they disappoint as such. And that's my 2 cents on this.
Fair point. In fact, I think we have the management bite as well. Let's hear out what the CMD, Anil Rai Gupta, had to say, explaining that despite a yearly dip in the EBITDA margins caused by the inventory channel adjustments and a delayed summer as well, the company does maintain the strong overall performance.
I think if we divide the results into 2 parts, which is Havells standalone and Lloyd. Havells, we have seen an improvement in the EBITDA margins, the operating performance, and Lloyd, there was a decline in terms of revenues and profitability. And that is also related to the fact that there was inventory in the channel due to a very bad season during the last year, and hence and a delayed onset of summer in the fourth quarter. So the revenues of Lloyd for air conditioners went down, and hence the resultant decline in EBITDA. But overall, Havells' standalone performance has been quite good, despite the fact that there were reduction in sales in seasonal products like fans and coolers. Other businesses of Havells has done very well.
Okay. What we'll do now is slip into a very short break. Thereafter, take a technical view with regard to Havells. Stay with us.
Back with closing trades right here on ET now. While for the index, it's getting out to be a little bit of a struggle. We're back to down 225 points as we speak right now. And the breadth of the market as well has gotten challenged, even though it started off on a very different note. While DRL, Cipla, Geo Financials, they're definitely the saving graces today, and a few Adani names. Nestle as well continues its uptick. But look at Trent. That's now fallen 4.5% as we speak right now. M&M is a big drag today, almost a 4% cut on that stock. You've got Bajaj Finserv, SBI Life. Technology continues to ebb off. Look at a TechM, it's another 2.5% fall on that stock, which, so to speak, has had the best of the IT results so far. Tata Motors PV, like we were just flagging, or an Infi, which is going to come out with its numbers today post-market hours, or just post-market hours, that as well is headed weak into its numbers, 2.25% lower for that stock. HDFC Bank down 2%, that's also weighing heavy on the index. Bajaj Finance, Kotak, Maruti, SBI, Reliance Industries, all these stocks are weighing heavy on the indexes today. But on to the big call for the day, and Motilal Oswal has initiated a buy call on Fujiyama Power, seeing about a 30% upside on the stock. What's the rationale behind that? Snehi joins in for that. And as we speak, for the better part of today's trading session, Fujiyama has been locked in upper circuit in any case. Snehi?
Well, yes, so a stock to watch out for today is Fujiyama Power Systems. You have Motilal Oswal that's initiated a fresh buy rating on the stock with a target price of 340 rupees per share, which is a significant upside of 31% compared to where the stock is trading at present. They say that the company is an integrated B2C rooftop solar solutions provider, offering inverters, solar panels, battery chargers and solar management systems. They've also scaled the capacity of their solar panels, batteries and power electronics to more than 1.5 gigawatts as of December 2025. The brokerage believes that the company is expanding capacity to tap into India's 100 gigawatt solar rooftop opportunity. By FY30, the company has planned 300 crore rupees capex for panels, inverters and batteries at Ratlam, taking their existing capacity to 3.7 gigawatts, as well as 3.8 gigawatts between these numbers in the next few coming years. The company has backward integrated into solar panels by setting up a 1 gigawatt domestic content requirement in the cell storage system in Jan 2026. And they also believe that PM Surya Ghar Muft Bijli Yojana, which is a government scheme when it comes to solar rooftops, is expected to support the growth potential for the company going ahead. They're saying that the company plans to expand its lithium ion capacity from 45 MWH to 2.5 GWH from FY25 to now by Q1 of FY27. That's the quarter that we are in right now. So lots of positives have been highlighted by Motilal Oswal on Fujiyama Power in terms of what their backward integration is, what their expansion capacity is, and how the government scheme is also expected to prove as a tailwind for the business. They expect the company to deliver strong growth of 56%, 65% and 65% CAGR in revenue, EBITDA and PAT over FY25 to FY28 respectively, and thus they're valuing the stock at 1.5 times FY28 EPS. So very bullish note coming in from the house of Motilal Oswal on Fujiyama Power, initiated by with a target price of 340 rupees per share.
Okay, thank you so much for that, Snehi. Fujiyama Power, that's the one which is up and away in trade, locked in upper circuit, 10% higher. Nitin, within this entire power space, how would you play it? Because it's very difficult to ignore, at least at this point. You can't ignore that one sector, which is power or energy.
Well, I think clearly the opportunity lies in two forms. One is you have the utilities that you can play this through, who are going to see good volume growth numbers, because if all of this has to pan itself out. And that could include some of the solar power listed companies that have come up in the last 1 year. At the same time, companies who are participating in the grid upgradation and modernization, companies who are on the HVDC side of the segment, or transformer manufacturers, or even cable manufacturers. So I think the entire ecosystem is looking good, and you can play it either through the utilities or the capital goods plays who are sort of playing into this. Because look, there are two big drivers that are happening. One is the fact that with all the solar power capacity coming in, you have solar power at one end of the spectrum in one geography, and power has to be moved across vast distances. So I think transmission grid investments are taking place. At the same time, as and when we see this whole data center boom roll out, you're going to see further demand come into play. And this demand is going to be disjointed because solar power tends to have oversupply during the day and undersupply. So I think all aspects of this chain are looking good, and one can look for taking investments there.
Let's address another very interesting conversation that we had. Godrej Industries, they're sharpening their growth strategy with a very clear focus on premiumization, capital efficiency and scale expansion as well. In fact, the management is now expecting the profit growth to exceed 20% with the target ROE of 18% across their businesses. And two of their businesses, they intend to list as well eventually. Let's hear out an exclusive chat that we had with Pirojsha Godrej.
We would like to continue to grow fast. We intend to continue to grow profits at over 20% a year. And as you rightly pointed out, what's very important is not just growth, but making sure that that growth is delivered very efficiently from a capital perspective. So we've also set each of our businesses a minimum target of achieving a return on equity of 18% over these next 5 years. And we'll continue to look at global opportunities such as Godrej Consumer Products, our FMCG business, which has nearly half of its sales outside India already. So that business does see a lot of global opportunities. On the other hand, we have some businesses that are very focused on the opportunity here in India. So Godrej Properties, for example, despite being the largest developer in the country now for 3 consecutive years, has a market share that's only about 5%. So we see huge growth opportunities by taking that market share up. And our aspiration over the next 5-6 years is to double the market share as we've been able to do over the last 5 years.
Okay, that's the take coming in from Godrej Industries, Pirojsha Godrej. But Nitin, just wanted your take in after, or rather in the backdrop of Nestle's performance. What is it that you're anticipating the FMCG sector to declare this earnings season?
Well, I think the FMCG sector, if you go by the initial results, and even if you see how stock prices have behaved of all the companies, the expectation that this should be a good quarter. I think the pressures of raw material plus the fact that it's more domestic facing and it's relatively has no impact of the West Asian crisis happening is all playing into this. And and people are also looking at this from the traditional defensive sector perspective with some amount of growth that is being built in. So I think it's a sector which has done well, although in my own view some of the valuations are pretty fair. And so we have more of a neutral stance on the sector.
Okay. And with regard to Trent, in fact, hear out a slice of what Jignanshu Gaur, who we spoke with earlier from Bernstein, said about Trent. He said Trent will not be able to sustain the growth of 25% and sees a fair price of 5,000 rupees per share over the next 12 months to come through with regard to trends. He remains cautiously optimistic on the company. Listen in.
Westside has done better than Zudio, and hence your gross margins have been better this year versus last year. That better Westside story allows you to have better gross margins, which sort of have trickled down all through. But when you look at a more fundamental metric, right, revenue per square feet, it is lower YOY, and that tells you what Sajid was mentioning, that we don't expect the margins to improve from here. Even if they are able to sustain it here, it will be a very positive for the stock. On the way we think about expansion in the Indian context is ROCE constant, but value per store does not go up, right? Or it's not better in a smaller town. So when a company goes from a large city to a small city, they have lesser revenue per square feet, but they also have lesser costs per square feet. That's how we think about it, that revenue per store does go down, and hence the value of each incremental store will go down, but so will the capex. When does the expansion stop? We think there is still a lot of headroom for growth. The advantage for Zudio is its pricing structure and its cost structure allows it to run on relatively thinner margins in apparel than most of the other branded large players. We think that a 20% growth stock will get anywhere between around 60 to 65 multiple, right? And that's the benchmark that we go with, which is why we think a fair price for this over the next 12-month period is around 5,000 rupees from the current value of 4,400, 4,500.
Arpit, what's your reading on the charts? I mean, the fact that the company did flag off very cautious consumer spends and it's turning out to be a bit of a sell-on news kind of a case for Trent. But given the sharp fall in the stock, what do you foresee next?
If I see the overall bigger trend of the stock has been under pressure. So if we see from last 6 months, the stock already correct from 8,000 to almost 3,300 levels. And if you see from last couple of weeks, the counter rally was seen towards 4,400, 4,450 levels. And coincidentally, if you see on the daily scale, the stock coincides with this 50 DEMA or may say 200 DEMA. And we have seen some cooler from the higher level from 4,440 levels. So our sense is that the stock is likely to consolidate between 4,000 to 4,440 levels, and a decisive close above 4,440 will change the bigger trend of the stock from a positional perspective. Till that time, the stock is likely to consolidate between 4,000 to 4,444 levels for next coming 2 to 3 weeks.
Okay. All right. And that's with regard to trend. I wonder, Kunal, whether any of the banks at this point look attractive, especially from the PSU pack. We've seen a bit of a correction. I know I'm probably asking you or repeating part of this question again, but is this a good buy on dips candidate, at least for today?
Yeah, I think the only stock I would probably look at betting at current levels could be SBI, because that's the only stock. There are multiple reasons for that. The low beta nature of the stock price, the resilience the stock has exhibited in the last many weeks, as well as over the last many months. Even going back to 2025, when the stock was at 700, 750 mark, when the rally started off for SBI. Even in this last 1 or 2 months of price correction, we're at a point where most of the stocks, even the Bank Nifty, succumbed under sharp selling pressure, and we saw the Bank Nifty falling below 200 moving average. SBI was one of the very few rare stocks which managed to hold on above its long-term moving average. So I think all of these points indicate that if there's one stock which I think traders could look at maybe as a resilient stock from the PSU banking name, it has to be SBI.
Okay, that's that on SBI. The one stock that I want to pick up from the entire IT basket is Oracle Financial. Now look at that stock, a pure play software product company focusing on proprietary banking as well as financial services rather than the traditional IT services. Nitin, looking at the way the IT landscape is changing, would you say that perhaps is the best approach right now, to stick with more product companies as opposed to the traditional IT services as we knew them?
Well, that's not necessarily true, because if you look at the kind of a hit even companies in the West like SAP and have taken. But I think the important thing is, the specific domain expertise that exists and how much of that you've been able, even in your own product, you will need to bring in an AI angle for it to continue doing well. But I think in the short term, you will see some of these product companies continuing to do well. But and even the IT companies you will see them come back in the short period of time, because I think the use case of AI is yet being worked out. And also I do feel that what we are seeing, these corrections or valuations, make IT companies look very interesting in the short period of time. Longer term, the business model is clearly challenged. And I do see that the multiple deratings taking place for a lot of the IT businesses as such. But I think short term, you might just get a good technical or a tactical play in this sector.
And Nitin, curious to know, where do you sit on with regard to banking and financials? So, let me actually take a step back. You were suggesting earlier in the conversation that select buying is the way you would go in a market like this. Would financials at all be there? And if so, private versus PSU, how would you pick?
I think answering the second part of the question, I think the next 6 months is probably you would continue to see the PSUs do well. And then you would see the private banks starting to come back, because one of the few things that we have seen in the results that have come so far is that NIMs have clearly bottomed out. And now it's really a question of credit growth starting to come back. And that should happen logically, because if supply chains are threatened, working capital demand is going to go up, and most people are going to insulate themselves by holding on to inventory and so on and so forth. So I think you should see private banks do well in the second half of the year. And besides that, I think you should see some of the second-tier private banks who had strategic stakes being taken by global players pan out as longer-term stories.
Okay. And what other pockets, if at all, you can give us with regard to that you're positive on at this point?
I think the correction in insurance that has taken place across, because this quarter was disappointing, especially in life, is presents an opportunity. Capital market plays look very, very interesting as such, and auto banks.
Okay. In fact, Ravinder waiting by very patiently. Thank you, Ravinder, for that. Give us a sense. What are the other stocks which are buzzing? Because we've got numbers coming in thick and fast. Give us a quick update.
Well, yes, three stocks in focus on the back of their quarterly result. Firstly, let's start with Sterling and Wilson Renewable Energy, where company reported a very good set of number in Q4 FY26 and as well as for FY26, where in Q4 FY26 revenue has rose from 55 crore to 135 crore, and company recorded highest ever annual turnover in the financial year. And if we talk about the order book of the Sterling and Wilson Renewable Energy, then company's order book was at, as of Q4 FY26, 11,813 crore, which was the highest level since the COVID-19. And management said that the diversification into wind and BES project is being well appreciated, and they see these two verticals to contribute significantly in the company's future growth. So back of the strong set of numbers, Sterling and Wilson Renewable was in focus, though the stock has slightly corrected from the day's low. Aditya Birla Sun Life AMC is also in focus after reporting their quarterly numbers, where company reported a profit at rupees 187 crore, which was down by 18% on a year-on-year basis, but revenue was at revenue rose by approximately 7% on a yearly basis at 458 crore. And lastly, Tips Music is also in focus on the back of the strong set of numbers. Stock is up more than 7% on an intraday basis, where company reported revenue at rupees 104 crore with an uptick of approximately 33%, and the quarterly revenue is at all-time high, and profit also rose by 93% at 59 crore, and margin has expanded from 48.2% to 74.3%. So back of the strong set of number, Tips Music is also in focus, and the stock is up more than 7% on an intraday basis.
Right, okay. Those are some of the mid and small caps which are, quite buzzing in trade as we speak right now. Though the breadth of the market today, of course, has gotten challenged along with the, the benchmarks as well. We're still down about almost 226 points, just about circling around the 24,150 mark for the Nifty 50 as we speak. And today it's really all about pharma and some of those power plays. So DRL surged up 9.25%. Piramal Pharma is holding up very well, 7.5% higher. Cipla has made a dash of about almost 5.5% as we speak as well. Nitin, anything within the pharma pack that you like the prospects of?
So I think the valuations of pharma have become quite attractive. I think we like the domestic pharma pack more than generic pharma, because where policy changes could yet sort of come and upset the apple cart. And also, I think the CDMO space has also corrected, and that also is the other space, part of the pharma space, which we like.
And what within auto, Nitin, how are you playing that story? You seem to like auto.
So autos is more a sort of a bottom-up play that we like. So we like the companies who are playing premium automobiles. We like the tractors segment within, which yet seems to have legs as far as growth is concerned. But more, we like the auto anch pack, because I think that is really a pure bottom-up oriented segment of the market.
Anything that you like within auto anchs? A few days back, we were observing the jump in a Motherson, for instance.
Yeah, Samvardhan Motherson is something which has been doing fairly well. Sona BLW, I think, is the other stock which has also done fairly well for itself. The only underperforming space within the auto anch is the tire stocks, because most of the tire stocks, the likes of Apollo Tires, JK Tires, etc., they are still not shown any kind of a major breakout for themselves. But I think we are in that stage of the market that it's better to just about try and wait and watch over the next couple of days, because many of these stocks on the auto anch space, they have run up steeply high for themselves in the last 3 to 4 weeks. The indicators are a tad bit overbought on the daily and the weekly charts for these stocks, especially after the last 3-4 weeks of a very strong rally for themselves. So it's better to take a pause over here, just wait for these stocks to ebb off, maybe show some signs of a correction, and then try and look at buying opportunities at lower levels.
And Arpit, let me come to you. Your take with regard to M&M in particular. We've seen a couple of days where you've seen some weakness on that counter.
If you see the overall bigger term structure of M&M is quite good. So definitely we've seen some cool off from the high levels in the entire auto pack. And if I look at the monthly set of M&M, major support is seen around 2900, 2950 levels. Whereas on the upside 3200, 33 is a hurdle zone. On the immediate basis, definitely some cool off is seen. But if we see the setup wise from the monthly wise, 2950 is a major level. Until it holds above that levels, the bigger term structure of the stock is still positive. And slowly, steadily, definitely the stock can head towards 3200, 3300 levels. So immediate basis 2950 is the key level to watch out for. Till it holds above that, our bias will be positive. So auto index as a whole has seen some cool off from the high levels, due to which we have seen some corrective move. But the bigger trend is still positive with a buy on dip stance in M&M.
Okay. The other one, we spoke with the management of, in fact, MTAR Tech, which perennially sits on a 52-week high. In fact, Aisha and me were speaking earlier this morning as well. That stock has just been making 52-week highs. And they've bagged orders from Bloom Energy. How is the execution being planned, and what are the company's capex plans looking like? Listen in to Mr. Reddy, the managing director, on what he had to say with regard to that.
I mean, there is a huge demand for sure. There's no doubt about it. And it's not for just 1-2 years, it's for years to come. And we are expanding our capacities based on that. And it's more on the demand side, and we need to just execute. So we are working towards that, and we are very excited about this. We have been working with our customer for more than 14-15 years. And we have done a lot of innovative things together. And now we are right up there in terms of ramping up, expanding our facilities, and ramping up to the extent what is required over the next 5-6 years. That's how we are planning right now. The initial expansion is done already. Then we are moving into the major expansion, which will take about 9 months to 12 months. So that's what we are looking at right now.
Well, that's the word coming in from the MTAR Technologies management as we spoke with them about the various verticals that they're now beginning to focus on. Having said that, Nitin, curious to get your views in on the defense pack. Should one be ignoring the valuations right now, and should it be add on each decline if ever you get that opportunity?
Well, I think it's you will get that opportunity. I mean. But I think it's you're right. It's more of an add-on declines sort of story. It's a long-term structural story. I think you will have disappointing quarters in the middle, because order book-based companies normally see that happen from time to time. And I think whenever that were to happen, you would get your chance to buy.
Okay, Nitin, we'll leave it at that. Thank you so much, and we'll let you go on that note. Thanks so much for joining this afternoon. Kunal, let me come to you with regard to BHEL. What's the take there with regard to charts now?
Yeah, I think again another day where the stock has shown signs of a very good price uptick move. I think in the last 7-8 days approximately, the stock has moved from 240 levels to 340. So it's a steep jump of almost a 35 to 40% for BHEL. Even at current levels, the stock looks quite strong. Given the context of the market as well as the way the stock has positioned. In fact, today also the stock could probably be closing at the high point of the day. So it's now become more like a weekly as well as a monthly chart to actually track BHEL, because after this kind of a 35%, 40% up move in the stock price, there's bound to be a point where the stock could consolidate. So you'll have to try and take opportunity of mild dips to try and average out further for traders who have already bought earlier and wanted to buy more. Because now I think BHEL becomes a stock which could show a lot of strong potential on the monthly as well as on the quarterly chart. So long-term buy for BHEL, and buy on dips is what I would advise.
Okay, buy on dips. All right, I want to also quickly have a look at some of the movers in trade today. Trend, of course, down 4% odd. Kunal, would you by any chance have a view with regard to trend, what to do at this point? I know you were bullish at that 33 to 3600 kind of level. Now we're at 4200. What next?
So it's a good price point where I would believe that the stock starts to look a little bit more attractive than what it was maybe a few days back. I think just about the last couple of days, the stock was at 4,500 levels. Today it's come back towards 4,200 mark. The 20-day moving average for Trent, is just around that 4,000-ish kind of a zone. So which means potentially, if the stock falls another 200 points, then I think it could be at a very attractive price point where traders could look at a contra buy. So my view remains intact on the bullish side, more on the medium to long-term time scale. And I think at 4,000 levels or slightly below those points is where I would believe traders could look at a fresh buy, specifically with a time horizon of 6 months to 1 year plus.
Okay, that's the take coming in right now on where Trent is headed. But take a look at the auto basket, because that's where you're seeing some significant amount of pressure definitely built in. Tata Motors PV, of course, has its different reasons, but M&M is down sharply, about almost 3.5%. Maruti as well is down. You're seeing other heavies like an HDFC Bank, ICICI Bank, and even Reliance ahead of its numbers, which is under pressure. And even SBI, for that matter, it's now sub that 1100 mark, 1094 in the futures is where we are currently at when it comes to even SBI. Arpit, a very quick take on how you're proposing trading right now, SBI and ICICI Bank?
If you see from the PSU basket, SBI is one of the strongest counter. So definitely, as you've seen some corrective move in the bank Nifty from last 2 days, SBI has taken some profit move of the high levels, but the good part is that it is holding over its 50 DEMA. So relatively on the weekly setup, major support is around 1070, 1080 levels. And a sense is that till it holds above 1080 levels, the stock can again move towards 1150 levels positionally. So overall, SBI would be a buy on dips counter till it holds above 1070 levels. Talking about ICICI Bank, so ICICI Bank is also relatively placed within the PSU private bank space. So good recovery are seen from the lower levels from almost 1200 to 1380 levels. So some pullback is seen on the weekly time frame, but the bigger trend is still positive. Overall, the buy on dips counter can be seen in ICICI also. A range would be 1320 to 1420 levels. Some dip towards 1340, 3030 levels would be a good level to entry, with major support around 1300 for an upside move towards 1400, 1420 levels.
Okay, counting down to the close, and it's a 24,150 kind of level that we seem to be closing the day with, down about over 200 points for the Nifty futures. Arpit, we'll let you go on that note. Thanks as always for joining in. Today, of course, sectorally, it's been autos, banks and realty, the rate sensitives which have really been under pressure. But yes, single-handedly it was Trent, and that's got to be the worst performing stock today on the indexes. SBI Life, Shriram Finance, M&M down nearly 3.5%, Bajaj Finserv, Tata Motors PV, TechM, Infosys ahead of its numbers, which should be out shortly, HDFC Bank, Kotak Bank, iShares, Bajaj Finance, ICICI Bank, Interglobe Aviation and Reliance Industries collectively have all been a sea of red. The handful of gainers today have been pharma, chemicals and maybe to some degree some of the telecom and power names as well. Within the Nifty, of course, it's been a DRL, Cipla, Geo Financials, Apollo Hospitals, L&T, Nestle, which have managed to hold out, along with, of course, Coal India and Adani Enterprises. Other than that, within the broader markets, it was Torrent Power, Piramal Pharma and Oracle Finance, which jumped up nearly about 8% in trade. On the flip side, though, there was correction for an Ashok Leyland, Force Motors, Union Bank, Havells, of course, which slipped nearly 8% towards close.
Yeah, absolutely. And you had some movers, of course. And within that pack, you saw the likes of a Dynamatic Tech up nearly 2%. Some defense names, in fact. Unimec Aerospace, Dynamatic, DEL, all of those closed in the green, as was the Nifty India Defense Index, which closed in the green. When you're looking at broader markets as well, you saw some bit of outperformance being eaten into towards the fag end of the session, 0.5% lower on the Nifty small cap. The Nifty mid cap also 0.4% lower. But of course, they have outperformed the Nifty 50 index by 1.5% in the last 2 trading sessions at the very least. So clearly, that outperformance within broader markets seems to continue even today. In terms of numbers and earnings which came out, well, IT was obviously one of those in focus. Trent was in focus. Bharat Coking Coal also was down 5% on the back of numbers. And of course, there was a plethora of numbers that came out even post the market open today and all through the day. So you had earnings releases, the likes of a Union Bank, where which saw a knock on the Nifty PSU banking index as well. Union Bank closed nearly 6% plus, 7.5% lower in trade on the back of elevated fresh slippages, which rose 25% on a sequential basis, due to which you saw that huge knock on the stock. And along with it, it took down the entire PSU banking index as well. So you saw that pressure creep through on PSU banks. Kunal, how would you assess the day of trade and what should one expect tomorrow?
Yeah, so I think today the market breadth was still in slight, I would say, flattish kind of a territory. It was not as if that the advance decline was skewed more towards the declines. We were more or less on a 1:1 kind of a advance decline ratio. But then I think the last 1 hour or 1.5 hour for the markets, where the indices were unable to try and show any kind of a recovery in the fag end, I think that could probably dampen the mood for the markets going forward. And as it is, I think Brent crude back at 100 mark would keep the market participants under edge. So it warrants that over the next couple of days, if we see the same scenarios across the globe where Brent crude, rupee starts to depreciate, if all of these patterns they continue to shape up for the global markets, then I think it's always a better possibility for our markets to start to be a lot more cautious, and we may probably head into a mild bit of a correction. My expectation is that maybe the test of 24,000 mark could be the litmus test for the Nifty trends in the near term.
But as of now, Kunal, what's looking like the weakest link in the market? Today, of course, the drag has been led by banks, some of the other heavyweights like L&T, Reliance, and auto specifically.
Yeah, so the three key sectors, Aisha, auto, banking, and IT. Nifty IT is on a weekly basis, I was looking at 5.5% down. Bank Nifty down 1,000 points from the last 2 days. And then the Nifty Auto Index, where you see names like M&M, which are very considered to be very strong stocks. If these stocks fall by 3, 4, 5 percentage points on a single day, it adds to a huge pressure for the indices overall. So when you have such kind of a strong indication from maybe 50% of the weightage of the Nifty 50, it's going to be very, very difficult for the index to try and lift off. And these are not just immediate corrections which you're looking at the stock prices. These are corrections which are on the back of news flows, fundamentals for many of these stocks. And that's why I would believe that the recovery for many of these stocks would take some bit of more time.
Okay, on that note, let's wind it up right here on this edition of Closing Trades. It's a goodbye from Harsh and me.